Welcome, everyone. Thanks so much for being here. My name is Rachel Schrader. I'll be hosting your training today, going over a couple of Allstate products. So to get started, want to give you a preview of what to expect. About 45 minutes of training and questions, and the chat is open, so please use it. If you have questions, we'd love to answer them here now. Odds are, if you have a question, someone else probably does too. We're going to be covering two main products here. We'll talk about Plan Enhancer and then TrioMed. And within those, there's a couple of other options and plans in there too. But those are the two categories we're covering, Plan Enhancer and then TrioMed. So let's go ahead and get started and talk about our Plan Enhancer. Within this product, I'm going to start with why in the world do we have this? Why should we be selling this and promoting it? What the plan options are, some details, and then we'll do resources all together at the end with both products. So I want to start with why, or what is Plan Enhancer? Imagine you have a close friend, maybe a family member, and just something bad happens. They get in a bad car accident. And let's say they were on a high deductible plan and their out-of-pocket max is like $9,000. Well, if they get a bill from the hospital of $9,000, odds are that's going to be a pretty hard hit. Not a lot of us have $9,000 laying around. But what if instead of just getting that bill in the mail, they also got a check in the mail for $17,000 to cover that entire out-of-pocket expense, but then also giving them a little cushion of maybe time they need to take off of work to make sure their bills are paid? Wouldn't that be just the best case scenario when something bad happens? Well, that's what Plan Enhancer is. And it's really sad because the average ER cost is $35,000. No one's got that sitting around. And if you do, whew, you're in a good spot. And, teach me your ways of how you got there. But unfortunately, the average person, all of our clients, that's just not something they have lying around. So Plan Enhancer is going to make sure that they're covered in the event something bad happens. Now, see some statistics here, 2.5 million Americans are hospitalized for injuries every year. So this is really a plan that can affect and benefit so many people. When you are on the phones and we're talking to our clients and we get them that fantastic medical coverage, we want to make sure we're adding on Plan Enhancer because this is just going to be an extra protection and really help minimize the cost in the event something bad happens. So what it really is Plan Enhancer is our product name of an accident medical expense plan. So it's going to cover those costs of any medical expenses resulting from an accident. And what I love about this plan is that we have two optional riders. So you can just sell the Plan Enhancer that covers the AME, but you can also add on a couple of riders, which I'll definitely talk about here to get an all-around encompassing great coverage for our clients. So I love selling this onto all of my plans because it's really making sure, okay, if something happens where you would have to hit that deductible, this is going to help you out. This is going to trigger that check in the mail to make sure you're covered and you don't feel the financial burden of that accident. Some of the highlights here quickly, you have options for the benefit range. So we can do anywhere from $2,500 up to $17,500, which is a huge range. And I love this because you can customize it to really fit what your customer needs. Personally, I always like to match the benefit range to the out-of-pocket max. That makes sure, that way, if anything happens that would trigger their deductible, and then co-insurance all the way to reach their out-of-pocket max, they're totally covered with this plan because it pays a cash benefit directly to the customer. My client has an accident, they get a bill in the mail from the hospital, but they also get a check in the mail from this plan. And because it's a fixed benefit amount, even if the cost of care is lower, then hey, that's an extra cushion to help them take some time off, recover, and not have to worry about the bills getting paid. And something that is just absolutely incredible here, why I am so excited to talk about this product and why you should be so excited to be here and how you're going to help close these sales these are acceptance guaranteed. I'll say that again, guaranteed acceptance on this plan. Your customer wants to get this additional coverage, guaranteed. This accident medical expense plan enhancer, as well as its riders. They're all guaranteed issue. I can't think of anything that gets sweeter than that of if something terrible happens, you're getting that check in the mail and you're guaranteed to get into this policy. What are these actual options? So we're going to touch on the AME part first, because that's what the plan is, and then those two riders. So an accident medical expense plan, a lot of us probably are pretty familiar with this, but it's going to pay those covered expenses from up to that selected amount of coverage. So remember, from $2,500 to $17,500, it pays out the benefit that is decided in the plan. There's no network restrictions or waiting periods too, because an accident isn't planned. We're not going to penalize someone for getting this plan and then having an accident in 33 days. Accidents aren't planned. That's what this coverage is for. So incredible option to add on to any of your plans, because they can see anyone they want to without a waiting period, and they'll get this awesome guaranteed issue plan. See a couple of things coming up in the chat. You can, so do these plans pay out the total amount lump sum? Yes, so this is a fixed benefit.
So, so yeah, there's three questions in here. Two of them were sent to hosts and panelists, guys. So the chat's not going to see a couple of these questions, so I was waiting on these. I'm sorry, Rachel. The first one from David that was sent, like Rachel just said, do these plans pay out the lump sum no matter what is charged? Yes and no, David. Yes, for the two riders. So your cancer, heart, stroke rider, which Rachel will go over in a second, and your sickness rider, which she'll go over in a second, those will pay out lump sum regardless. The accident piece will pay out up to your medical claims, up to your benefit amount. So if you only get medical claims in $3,000, it doesn't matter that you have $17,000 of coverage. Now, the opposite, if you get $17,000 in medical claims, but maybe your stop loss on your major health plan is at $9,000, you could still get all of those medical bills claimed paid. So that might be where that question came from.
Thanks, Nick, for the clarification there. I appreciate that.
Of course. And then Brad, you asked, new agent here, is this something that you can add to anything, really? Someone that has a ministry sharing plan to help cover them costs or anything? Absolutely. Guys, this plan can be sold standalone. It can be added on to anything. I mean, you can literally sell this as a standalone. This could be somebody's insurance. There's obviously going to be huge gaps there, but this could even be sold as a standalone. And then maximum age is 65.
Mm-hmm.
And then David, one benefit per year on the two lump sum payouts, okay, on those riders. Your accidents, you can have as many accidents in a year as you want if you really want to keep falling down some stairs, okay? Guys, all the rest of the questions we're going to hold off on for a second so Rachel can get a little through this. We'll answer questions at the end. Sorry, Rachel.
No, I appreciate the clarification. Thank you so much there. Got a little tongue-tied with what I was saying. Nick's totally right. So if you are paying for $5,000 in accident coverage, but you break your arm, get an x-ray, and the bill was only $1,000, well, you'll get that $1,000 to pay for it. Then you've got $4,000 of that cushion left for the year if anything else happens, since you were paying for a $5,000 coverage. A couple more highlights here. Now, this isn't for every state it's available in. So if this is something that you're getting excited about, make sure that you check the states that you're licensed in and where this applies, because if it does apply, it makes it so easy to explain the value. And we all know our clients and our customers, when we're on the phone talking to them, the easier it is to understand, the easier it is to get the sale. So one of these benefits in some of the states is the deductible decreases. So if you have an accident that first year, you paid for the $17,500 of coverage, you're just going to have a deductible of $250. That's it. And then year two, it's going to go down to $150. And when they're on this plan for 3+ years, a $0 deductible. Folks, I'll say it again, a $0 deductible. It doesn't get better than that. But it can, because look, there's even more benefits below. In addition to a decreasing deductible, it's also an increasing benefit for medical equipment. So we can see from year 1, year 2, year 3, you're going to get additional benefits just for sticking on the plan, as well as the benefit for ground ambulance increases. From year 1 to 2, doubling the benefit. From year 1 to 3, it's a triple benefit amount. So in the states listed below, these are some of the great selling points you can add on explaining this to your customer. Not only is this going to cover that accident expense, but stick on the plan, you won't have a deductible in 3 years. And you'll get additional benefits in these other categories. I mean, come on. That is so cool. And here specifically are those different levels available. So this is the part where I was saying I like to match my benefit level to what my client's max out of pocket is if they have a major medical plan. That way, it's going to be even, covering those costs in the event something were to happen where they get that large medical bill. This way they feel nice and secure. And if you're looking at numbers and they're saying, no, that's just a little out of budget for me, okay, that's fine. Let's at least cover the deductible amount on their major medical plan. So that way it's a lot easier, not as big of a financial burden. So one of the writers for Plan Enhancer for our AME is the Cancer, Heart, and Stroke writer. It's going to match the benefit from the Plan Enhancer, from that accident medical expense plan. Now, this is the one going to pay that lump sum, but it has to be for a first ever covered cancer diagnosis and a first ever covered heart attack or stroke. So unfortunately, if our client has a history and has already had a heart attack before, this might not be a good writer to add on, because it would only cover them if they've never had cancer and had a cancer diagnosis. So just a little background, we want to make sure they don't have a history of these things. So that way, in the event, unfortunately, if they were to get a first-time diagnosis of cancer, this is going to help tremendously cover some of those costs. Now, there are a couple of waiting periods with this rider: 90 days for cancer, 30 days for heart and stroke. So just some things to keep in mind as we are looking to add this on. But if your client is looking for that overall encompassing coverage, these riders are really great, because you have your accident medical expense covered. Then in the terrible event that they had a heart attack, stroke, or a cancer diagnosis for the first time, this would also help pay for those expenses. So say my customer has a $5,000 AME, they're also doing a $5,000 cancer, heart, stroke rider. In the event something were to happen, they'd get that lump sum check in the mail. The second rider that we're going to touch on here is the sickness hospitalization rider. And the reason why this one is such an important and a really easy one to sell and add on to the AME plan is because there's that thing like 3-4 years ago now that's kind of resurfacing again. Yeah, COVID. Remember when everyone probably knows someone who was hospitalized because of that, whether it was your immediate friends or family, or one of our own clients, or one of our clients' friends and family. If you are admitted and are staying the night in the hospital for even just one night, that's going to trigger this rider to go into effect. And this one also is that lump sum benefit. So even if it's just one night, that customer, that client is going to get the entire benefit paid out to them. And that is such a relief because those bills can get really expensive, and just have that security of knowing if I have to be in the hospital for nights and days and everything, I'm going to get a benefit paid out to help make sure my mortgage is paid, the lights are on when I get back. So this also matches the AME benefit amount. Now this one does have a limit of one benefit per year per person. So if you have multiple individual stints of staying in the hospital, it's just going to be paying out for that first one. So maybe if it was a little extra than what it actually cost, put that in a savings account. Maybe don't go take a vacation with that. But if it is a family, you do get 2 benefits per year for the whole family. Also, a 30-day waiting period, and this product cannot be sold as a standalone. This is a true rider to the plan enhancer. When you're looking at this, also just make sure that this is a good fit for your client because pre-existing conditions and limitations will apply. And I'm not going to go over all of those because we'd be here till Sunday, but just make sure you're reading the brochure and the resources, and I'll show you where you can find all of that before we wrap up today. Some final notes on the plan enhancer as well as these 2 riders. Let's talk about eligibility. Where is it available? Some of those limitations and exclusions, and I'll touch on enrollment and payment, and then we'll go on to TrioMed. Trainer Nick answered this one earlier. This is for anyone up to the age of 64, because after that, they can start applying for Medicare, and that's probably going to be their best option. Now, really cool thing is there is a child-only option here. So you can get child-only policies for the plan enhancer. Now, the cancer and heart, stroke, sickness, hospitalization, those 2 riders, that's for anyone ages 18 to 64. There are no child-only policies for those riders. This is a pretty wide array of states that these plans are available. Now, remember, some of these have a little additional benefits, that decreasing deductible, increasing medical equipment expense and ambulance expense. Make sure that when you're looking at your states, your license, and you sell in, see which ones qualify for those additional benefits, because that's just so much easier. That just sweetens the pot of, we're already talking about a worst case scenario, a really expensive accident. Let's make it a little bit sweeter with those additional benefits that can come in year 2, year 3 on the plan. So lots of states you can sell plan enhancer in, quite a few states where you get those additional benefits too. A few of those limitations and exclusions, just to be safe, we'll cover a few of them. Anything before the effective date, it's kind of a given. If you have a heart attack before you get this plan, it's not going to be covered. You weren't on the plan. It makes sense. As well as dental treatment, except as otherwise covered for a dental injury. That's dental insurance. That's not going to be covered here. Hernia, heat exhaustion, mental, emotional disorders, not going to be covered. Intentional self-inflicted injury, that's not an accident, unfortunately, so it won't be covered. an injury resulted from war or active war, you've probably got your insurance through the veterans, and that's where you would go through there, or any hazardous activities and occupations. Now, this isn't just like, oh, I'm gonna go ice skating on a winter date today. It's like skydiving, race car driving, those kind of hazardous activities or occupations not going to be covered. Again, a couple of things to just check when you're looking at these: timeline with pre-existing conditions, as well as the waiting period, depending on which state you're in. So once I go over where to find the resources at the very end of today's presentation, make sure you check those out, figure out where you sell, what applies, and everything. So that way you've got it all sorted out. So that next phone call where you're talking to someone, you can really give them the best coverage and talk about some of these additional riders because they've got really good coverage in your state.
Now, before we jump into TrioMed, let me answer some of these questions now on Plan Enhancer so we can kind of keep it where it is. All right, Chris Brown, you asked if the person has a medical plan that pays for the accident, can they get reimbursed with the check in the mail? Absolutely. Guys, there's a term in this industry, legal jargon or insurance jargon, that's called coordination of benefits. We do not do a coordination of benefits on these plans. What that means is we don't care what your other insurance is out there, meaning you could have insurance out there, you could not have insurance out there. We don't care. The plan's going to pay what it says it's going to pay. So yes, if you get a medical claim and you submit that in and you're on this plan, we will pay up to what we say we will pay on that. Mark, I have no idea what a 24-hour accident plan means. And no, it does not pay on the job. At most jobs that you could get injured on, it's not going to pay at the job. Now, maybe if you're working in a call center and you fell down the stairs walking out to your car, possibly. But most jobs where you can get injured on the job, that's going to be your employer's responsibility. When you reach the max payout, Colleen, does the plan start over the following year? Is it done once the benefits are paid? This question's fully loaded because it's different for the AME and for the riders, okay? For the AME, and this will actually answer about 3 of the questions that came in the chat, so I'll answer these all at once. For the AME plan, guys, it is only going to pay the benefit amount you got in that given year. So let's say you got $10,000 of benefit coverage on the accident. That's the maximum it's going to pay out in a year, but it's not triggered by a certain amount of accidents. So it could take 100 accidents to get to that 10 grand, or it could take 1 accident to get to that 10 grand. The reason that 10 grand doesn't matter after you hit it, guys, we've paid their insurance deductible now, right? We're supposed to get an amount that's going to match their insurance deductible. So they should have no more medical bills after that anyway. But that's the accident plan. It's going to pay out up to the benefit amount in a given year. So again, whether that's 10 accidents, 1 accident, it'll pay up to what it's going to do in a given year. Next year, resets, you're over again. Cancer, heart, and stroke. That is a one-time payout. It's actually 2 times because we break cancer and then heart and stroke. So you can get paid out once for cancer and then once for a first ever heart attack or stroke diagnosis. But once you hit one of those, that category is dead on that rider, okay? Now the sickness hospitalization rider, Rachel did touch on this one for you guys, so hopefully you caught it. That's once per year. Once per year, which means you can get multiple sickness payouts. If you keep getting admitted to the hospital for sicknesses because you got a really weak immune system, cool. This plan might be great for you because you could get paid out every year. Now, if you have a family on the plan, you can get paid out twice in a given year. So a little bit different. The AME can pay out as many times over the year. Sickness can pay out once per year unless you have family. Cancer is 1 and you're done, okay? Samuel asked the Social Security number question. I love this one, Samuel. My dad was an illegal immigrant from Costa Rica, so I am a big fan of this stuff. Big thing for you guys to know, We do not ask for social security number on that. Well, we ask for it. We do not require social security numbers on any of our applications, but they have to be here legally to get claims paid. So we're not going to worry about it today, right? When you submit that application and you don't want to put a social on it, we don't care. We're not worried about it. But please believe when they submit a claim, now we're going to do our due diligence. Should we pay this? Are they here legally? Okay. And that would be H-1B visa, like you mentioned. Cool. They are here legally. It is not on us to determine if they are here legally. So if they tell you yes or no, cool. I'll do the app. I don't need to put your social in here, right? But just make sure that your client is aware. If you submit a claim, we will do our due diligence to check if you guys are here legally qualified, right? And then Mikkel, that question was answered already. The client must have a fully insured plan to sell Plan Enhancer. Absolutely not. This can be sold as a standalone. You don't need any other insurance to get this plan. And then Penny asked, can the CHS be standalone? Yes and no, not this CHS. This CHS and this sickness hospitalization that are guaranteed issue are only part of the Plan Enhancer bundle, so they need to be sold as a rider on the accident plan. However, great question, because Allstate definitely has cancer, heart, and stroke, and critical illness plans, but depending on the state and the amount, your customer might need to pass a health questionnaire for that. What if you own your own business and get hurt on the job? Bradley, you probably don't own a business asking that. Any business owner has insurance, okay? That's one of the first things you need to do getting into business is get insurance. So you should be protected under your own insurance there. But again, it really depends on what that occupation is. If we get a claim and we deem it to be a hazardous occupation, we're not paying out. I don't care if you own the business, if you're an employee. But if it was legitimately an accident, you fell down a set of stairs in a corporate building you work at that you're not doing anything but working on a computer, sure, we might be able to get that claim submitted, okay? You said that work should cover AME. What if the client is self-employed? Oh, yeah, well, we just talked about all that.
Kind of the same question.
If that category is dead after the one-time payout, if the diagnosis is paid, does that premium drop off? That's actually a great question, Shelly. I don't know that answer. I think I saw Tyler Jackson in here. Tyler Jackson, do you know that answer if you're still in here? Does it pull off the that portion of like cancer, heart, stroke, or no? Do we just need to rewrite them with only the second writer? If Tyler's here, Tyler is my brains here, guys, half of the time in this company. And if you guys are on his team, you're blessed. Well, I'll see. Okay, and then the AME slide showed cannot be sold as a standalone. No, it definitely can. It definitely can. You're probably thinking of one of the riders. The cancer, heart, stroke rider and the sickness hospitalization rider, those say they can't be sold as a standalone. They have to be a rider. But Plan Enhancer definitely can be sold as a standalone.
For sure. Thank you so much, Nick, for helping out and answering a lot of those questions in the chat. I appreciate it.
Of course.
Final few notes on Plan Enhancer. Enrollment, you can do any day of the month between the 1st and the 31st. Reoccurring payment sometime between the 1st and the 28th. Once they have that initial payment, their coverage will begin working. So we'll cover a little bit more about enrollment and resources after we talk about TrioMed. So just to recap, Plan Enhancer is an accident medical expense plan. It can be standalone. You don't need a major medical plan, but it's also a great option to add on to a major medical plan. There's the cancer, heart, and stroke rider that's available, as well as the sickness hospitalization, and those are guaranteed issue. When they're the riders on the AME, these are guaranteed issue policies. No network restrictions. They can go see whoever they want, wherever they want, and it's available in a ton of states. So that was category 1 that we're covering, Plan Enhancer. It's an accident plan with optional riders. TrioMed's a little bit different. because this is an accident plan, but it is pre-bundled. So you cannot pick and choose riders. This is a product that has kind of 3 separate coverages bundled into one. So that's the big difference there. Plan enhancer, AME plus optional riders. TrioMed is the pre-bundled together, all-encompassing, very robust coverage. So let's get into it. Why TrioMed? Plan design, the details, and resources to wrap up. Very similarly to why we sell Plan Enhancer, it's going to be a great option to add on to plans. It's going to help pay those really expensive accidents, those things that trigger people to meet their deductibles or their max out of pocket. And with all of insurance plans going up in prices and the benefits decreasing, people need an additional coverage, additional buffer to feel safe and comfortable knowing if something were to happen, they're covered financially, and make sure that they feel good about that. Because really, we're all trying to solve a potential problem. We want to be those people that, hey, worst case scenario, this is what could happen. We're going to have you covered all the way through. So you don't even feel that deductible that you have to pay, because we're going to get you this additional coverage to make sure you're protected. So just like we talked about, helps cover those unexpected medical costs, because in TrioMed, it's going to have an AME, critical illness plan, and then accidental death and dismemberment. And this is available as a standard issue or the guaranteed issue as well. But it's those 3 products are bundled together. These are not riders. These are 3 that make up the TrioMed product. Let's talk about what are those benefit levels and those 3 different types of coverages so you understand what TrioMed is. There are 3 benefit options available: $2,500, $5,000, or $10,000. Again, I like to match it to the out-of-pocket max, make sure that they feel covered. If they were to ever have to meet that in a year, it's going to be covered by this plan. Now, this applies to each of the coverages, the AME, the critical illness, and the AD&D. So whatever benefit level they choose, it applies to all 3 categories. The standard issue is going to be a cut and dry $5,000 for AME, $5,000 for AD&D, but then the critical illness benefit can either be $15,000 or $30,000. Depending on talking with your clients, you feel what's going to be the best fit in the future for them. Let's see what these come out to for these different benefit levels. Starting with the accident medical expense. This is going to cover the expenses for the injury that's covered with just a $250 deductible. So in the event that there is an accident that's going to be covered by the plan, we've only got 2 rules here. Have to seek treatment within 30 days and receive all of the follow-up care within 26 weeks. That way, it's kind of, again, ensuring we're not letting something get really, really, really bad where it would be 10 times more expensive, rather than, hey, this accident happened, hurt my back, getting taken care of right away before it could get worse. And then making sure that follow-up is timely, making sure we're taking care of that accident for our customers. So that is going to be the AME for TrioMed. Moving over to critical illness, this is where there's a little bit of variance from the 2 products, because here the critical illness plan has 3 different categories of different covered conditions. This one, again, though, is paying a lump sum cash benefit. So if you trigger one of those categories for a condition, I'm sorry, it's not a good thing, but here's a check to help compensate and make up for potential problems financially that this could have on you. So this is, again, payable upon the first diagnosis. Remember, can't cover something if it's already been an issue. This is for a first-time diagnosis. With critical illness, there is no deductible, no waiting period, or network restrictions. So you get diagnosed with a critical illness, well, here's a lump sum payout. You can see whoever you'd like to. Doesn't matter if you started this plan 2 weeks ago or 2 years ago, and you do not have a deductible you need to fulfill first. So let's say my client goes in, unfortunately gets diagnosed with something that's going to require long-term treatment. Well, they know that they can take a deep breath because the immediate is covered. Financially, they're going to be okay. Let's look at these different categories. So there's 3 categories, and we've got the different payout for them and some of the different things that could trigger it. So you can have a heart attack and get paid out that lump sum. Okay, that's a one-time only, and this is your first ever heart attack. You get 100% payout there. Unfortunately, really bad luck, really bad genetics, you're still on the plan, but next year you get diagnosed with invasive cancer. Well, you're going to get another 100% benefit payout to help you there. Additionally, we've got category 3, severe burns, covered, 100% payout. You go into a coma, it's 100% payout. So say it's just a really terrible accident that happens. You had a stroke and it puts you into a coma. Well, you're going to get paid out for each of those separately. So you're going to, if your coverage is $5,000, you're getting $5,000 for the stroke and $5,000 for the coma. It's a really bad day. It's a really bad day, but you're getting 10 grand to help soften the financial burden. Robert, absolutely. You'd rather get a check in the mail than a get well card. That's a great way of, when we're talking to our clients, of why this should be something that interests them. Would you rather have me send you a get well card or a check to cover the expenses? It's pretty easy which one they're going to pick there. So this pays out per incident in the different categories. But once you get paid out for coma, you cannot get paid out for coma again. This is first time conditions. For the primary person, 100% of the maximum benefit available. For a spouse, you're looking at 50%. So this is kind of a little bit of a guessing game when I'm selling this to a family or just a couple of, who do you think might be at higher risk for these things? Let's make them the primary and then their spouse the secondary. So it's just one thing to consider. But then also there is 25% covered for children on the plan. Now, AD&D, I've never had a client call me and say, hey, I'm really worried about, losing my hand or a couple of fingers next week at the job. I've never had that. If you have, very interesting. Hopefully you sold them a plan like this that helps cover that, but I've never experienced it. Trainer Nick's never had it happen. But this is a good thing for that what if, that worst case scenario if something were to happen. Specifically, I just saw on TikTok that snowblowers are a huge problem for people losing their fingers and their hand, because when it gets clogged up with ice, people want to stick their hand in and try and fix it. But then once it goes, you want to have this coverage for those accidents that you're not planning on, to make sure that you're going to get that help along the way. So pays out for death resulting directly from covered accident injury or dismemberment, a lump sum benefit, again, not restricted to the medical expenses. So looking at what that coverage is, got a couple of different categories depending on what the loss is, depending on what the dismemberment is, ranging from 100%, 50% to, I believe that's 25% behind my chat. Yeah. So this is just a good thing of worst case scenario. You have long-term changes in your life. Will pay out again. to help get that initially covered. Now, this one pays 100% for the primary and the covered spouse. You don't have to choose who's more accident prone or most likely to lose a limb. 100% for both, as well as 50% covered for a child. So really good coverage here, especially looking at couples, families. This is a good one to have in their repertoire as additional coverage. With all of this, we're still talking about TrioMed. Remember, this is the TrioMed, those three. You're also getting membership to the Life Association. If you're familiar with this, I love it. But if you're like, what the heck is this, Rachel? Well, everyone's heard of Anthem, Blue Cross Blue Shield. Anthem is the association. That's not actually the network or provide any of that. That's an association. Basically, an association just really helps keep costs level, not penalizing someone for using their plan. The whole idea of this, if someone uses their plan and there's a bad accident, we want to make sure they're protected. An association is going to group like people together, so that way the average, it keeps costs down. Instead of one person having a really bad year, triggering all these expenses and benefits, and then it's like, oh, you really put a dent in the bucket there. You're either kicked out of here or the rate's going way, way up. Associations help prevent that. Additionally, tons of benefits. So you can just see here, and there's more resources online that talk about the benefits of the Life Association, but you can get physician help via phone or video 24/7. You get mental well-being benefits. There's also benefits for staying active and other discounts. So just another benefit that's included in the TrioMed product. Talk about eligibility for TrioMed, availability, limitations, and payment. Very similarly to most of these plans that we're talking about, this is great for anyone 18 to 64 at the time of application. And this covers children up to 26, because 26, you get booted off your parents' primary and then have to get your own insurance. But if there's a dependent who's 24, 25, still on their parents' medical plan, first of all, they are blessed. They have it so good. They don't know until they know. And then they can still get this coverage, this additional coverage. The standard issue plans require applicants to fill out a health questionnaire. So that's something to keep in mind, but probably looking at the guaranteed issue ones, which will not require the health benefit and is renewable till age 70. However, one little thing, the critical illness benefits will reduce to half at the time of 60, once they reach 65. Just with age, we know more likely to have some things come up, but until then, you've got that 100% coverage, which is extremely like a good safety net for people to have. Where is this available? Quite a few states. Again, this will all be covered in the resources in case, you have so many licenses and you can't jot down fast enough where this is available. I'll show you where the resources are online, but this is just to get you an idea of where you sell, where you're licensed, if this is an option. So this is great plan, lots of availability across the country. Some of the limitations and exclusions, if you're in the armed forces, again, you're going to be covered with veterans insurance. Intentional injuries, it's not an accident, it's not going to be covered, or anything from hazardous activities or illegal activities, not going to be covered. Intercollegiate sports, semi-professional sports, and professional sports, not covered in here. However, you can, if you're just doing like recreational, that's awesome. You can get this coverage. It'll be an accident. I can go play beach volleyball, and if I roll my ankle, I'm covered here because I'm not playing intercollegiate or semi-pro by any means. I'm playing in the B League here. If they're eligible for Medicare, only for the accident medical expense plan, they won't be covered. And then workers' compensation, that was the term I was trying to think of but couldn't remember. That's when we're talking about if someone gets hurt on the job, they're not their own employer. Say I'm serving at a restaurant, I slip and fall. That's workers' compensation, happened at work. That business is taking care of it. That would not trigger the accident plan. And then same thing with enrollment and payment. You can enroll any day of the month. They'll have a recurring payment sometime between the 1st and the 28th. Their plan is active after that initial payment, and always recommend setting it up to automatically charge from a bank account. I've lost credit cards expire. If you do it to the bank account, this guarantees that they're going to have that payment go through and they won't have a lapse in coverage, because this is for accidents. The worst case scenario is they missed payment, they have an accident, but their plan lapsed. So make sure you're setting them up for success. If something were to happen, they've got this coverage. Now, before we go to resources, I do want to kind of touch on when are we selling one or the other. I'll come back to these resources, but I think it's important to understand what's going to be the best option for my customer, my client here. A lot of the times it's going to be cost and where you're located. So here we've got 4 different areas. We've got Miami, Dallas, Nashville, Phoenix. And I wanted to show you this because sometimes it really just depends on where you are, what's going to be the best option. So if we come down here to the accident plans, we can see Plan Enhancer is like half the cost of TrioMed in Miami. But on the flip side, in Dallas, Plan Enhancer is over twice as expensive as TrioMed. Hopefully everyone can see these. I'll zoom in a little bit more. And so I hope that just helps get a better grasp of when should I sell one or the other. A lot of it depends on where you are. That's going to be dictating what's the better product to sell, because you've got Plan Enhancer with the optional riders, but then you also have TrioMed. And the cost is going to be pretty variant based on where you are. But also check this out. TrioMed, it's that life association. Remember, it's going to try and keep costs more steady, not penalize people for using it. And we can see that the cost there for these 4 different areas, TrioMed's the same price because of that life association. That's one of those benefits. Whereas Plan Enhancer doesn't have the life association and the price varies from state to state where you're located. So important to note, based on where you are is probably a big indicator of which product you want to offer and position to your clients.
Unfortunately, Terry, this training, we're not going into the quoting platform, so we won't show how to quote it in this training. So yeah, unfortunately for that. The rest of the questions I'll answer after Rachel's done.
Okay, thanks, Nick. Now, you've made it this far. I want to make sure you know where to find all of these resources, because this is a lot of information. There's things that vary state to state, limitations, waiting periods, and whatnot. Let me show you where these resources lie so you can feel confident you're giving your clients the best information. All you got to do, go to allstatehealth.com and bookmark it. I'll say it again, allstatehealth.com. If it's not a bookmark already, let's make it a bookmark today, because this is where you'll find all of these resources for Plan Enhancer and TrioMed. Specifically for all of us agents, brokers, you've got your own section. So this is not just going to give you brochures and information. You can also get marketing materials here. So now that open enrollment is closed, grab some resources from the agent and broker section over there. Lots of information, help understand these different plans. Make sure you're getting the best fit for your client. Now, on the customer side, they have their own section as well. Help them find doctors in their network, But with these plans, they don't have network restrictions, so not really a problem there, but they can submit claims, view their documents and everything. But yours is the agent and broker section is where you're going to find the meat and potatoes of what you're looking for. And once the client has all of their payment information in and they're good to go, they have their own member portal to work with. But remember, yours is allstatehealth.com. Remember that? allstatehealth.com. So finally, a recap of TrioMed. It's going to be your accident plan, critical illness plan, and accidental death and dismemberment. No riders. It is those three all the time. Your AME does have a deductible, but there's no deductible for, or there's 3 possible critical illness payouts. So there's those 3 different categories. It's a more robust critical illness plan compared to Plan Enhancer. There's guaranteed issue available. You're getting all of those benefits of the Life Association, and again, available in a lot of states. So we're going to round it out and open it up to questions, but just as a quick recap of it all, Plan Enhancer, a great accident plan, can be a standalone, can be a supplement to a major medical. In addition, you've got 2 optional riders if they want more coverage, more protection: cancer, heart, and stroke, and sickness hospitalization. Whereas TrioMed is the 3 products we covered: accident, medical expense, accidental death and dismemberment, and critical illness. Can't pick and choose on that one. It is those 3 bundled. But hopefully through all of this, you're seeing there's more options out there. This will really protect your customer from when something triggers that medical expense, when they have to meet a deductible, unfortunately reach their max out of pocket. There are plans that will pay them to help them not feel that financial burden. And so I highly encourage you, if you haven't already, start adding these plans on, because if something happens, this will pay them and cover that expense. It's a really great option. You'd rather have a check in the mail than a get well card. So we're going to go ahead and start working through questions in the chat. I'd recommend sticking around to hear the answers in case you have similar questions, but we're going to go ahead and start answering these questions.
Heck, so good question. This is kind of a large group of questions here. You guys are thinking of a lot of great stuff in here. So Ken asked, if someone dies suddenly at home from a heart attack and there are no medical bills, does the plan pay? It's a big thing here, guys, and let's simplify this, okay? The only piece of this that is paying out medical bills is the accident piece, okay? The heart attack is paid out by a trigger of a heart attack, right? The accidental death and dismemberment is paid out by an accidental death, which a heart attack wouldn't be considered an accidental death, but they could get a heart attack payout there, right? Because they had a heart attack, okay? Has nothing to do with your medical bills. Rachel actually touched on that when you were talking about the AD&D. You know, if you lose an arm, it actually said it on the slide. You don't need to get any medical bills. If you lose your arm, that will trigger the payout. We don't care about the medical bills, right? So it's only the accident plan that cares about the bills. That's what's going to be paid. All the rest are triggered lump sum payouts. It'll pay if you trigger, okay? David Paul asked, if a husband and wife each have their own plan, would the plan pay out the full amount on their own plan and then also the 50% benefit to the spouse? Same question for kids. First thing, David, I'm very nervous about that question because all of us as licensed insurance agents and brokers took a test saying that we would not overinsure our customers. And reading that, it sounds like you're trying to overinsure there. What I would do, if you wanted 100% for both, write the wife her own plan, write the husband his own plan, okay? Unfortunately for kids, they can't get their own plan, right? They have to be on the parent's plan. So that would answer your question there. Shelly asked, okay, I'm not even going to read the whole thing. She's asking if a guy is self-employed and dropped a printer on his foot. Guys, we're thinking way too crazy here, okay? Shelly, that is definitely an accident, Okay, that is definitely an accident, dropping a printer on your freaking foot, right? That's not saying that he was doing something dangerous around his house. Nobody cares that you're actually, shoot, I have my own LLC, guys. I literally have my own LLC. I'm self-employed on the side. That has no relevance to anything. I'm not doing a hazardous job, right? If I drop the printer on my foot, you don't even need to say I did it while I was working on my LLC from home. No, I freaking dropped the printer on my foot, right? That's an accident. It'll pay out. We're thinking too deep into that one. Not to be skipping ahead, Irene, can you speak between the difference between TrioMed Standard and TrioMed Guaranteed Issue? Yeah, I would never sell TrioMed Standard. That's the difference I would give you there. Only sell TrioMed Guaranteed Issue, okay? Guaranteed Issue goes up to $10,000. So what that means is $10,000 of accident coverage, $10,000 of AD&D, and $10,000 of critical illness, okay? If you try to go to the standard issue, what it changes there is you are now limited to a $5,000 amount. So $5,000 of accident, $5,000 of AD&D, but now with your customer passing a health questionnaire, you could go up to $15,000 or $30,000 on the critical illness. That's dumb to me, guys. We have separate critical illness plans. Give them $10,000 of guaranteed issue TrioMed, and if they need more critical illness coverage, we'll go get that for them, right? So make sure that you're aware of that. And Rick, I think you asked kind of similar into what that other question was. It's an accidental death, guys. So you usually won't trigger both payouts from that. Like they'll say, no, this death wasn't an accident. It was caused by this critical illness. But the critical illness would trigger a payout. You just usually wouldn't see that both, okay? Brad asked, if someone purchases in the state of South Carolina and then moves to Florida, does it transfer with them? As long as it's in the state that they move to, they're eligible, but they need to call in and give their address update, and it could change the amount they're paying. Insurance costs different in different states and different counties. So it does not guarantee them he gets to pay what he was paying in South Carolina. But as you saw from Rachel's list, Florida's pretty cheap on Plan Enhancer. Maybe he gets a discount moving to Florida in that situation. But yes. Marcy asked, do the costs go up every year? Yes and no. It's really 10-year banded, Marcy. So from 20 to 29 years old, you're going to have pretty much one price. Then you age into the 30s, 30 to 39. You'll see a tiny jump. 40 to 49, et cetera, et cetera. Every year, if there's a price increase, it's like pennies. It's very nominal. It's those significant jumps you're seeing are happening in the 10-year bands. And then it looked like the AME on Plan Enhancer was not in Indiana or Ohio. Where can we find a map to see where available? Penny, Rachel showed you that. She gave you the gold. Go save allstatehealth.com right now. Go bookmark allstatehealth.com right now. And you will go to existing brokers or brokers tab. And there's all of our brochures and marketing material there. And it gives you a state map right there. Brian asked, does this plan stop at age 65 or just issue before age 65? TrioMed will roll to 70, but let me say it different for you guys here. I stop everything at 65, and I'm going to age you into Medicare plans, okay? Guys, under 65 plans, as a rule of thumb, suck as you age into Medicare. There are better plans. Medicare age has Medicare plans for people, so I'm going to transition all of my clients to a better Medicare package for their 65 on years. And there's a lot of great Medicare plans and supplements that give some really good benefits if you get it right at 65. So yeah, I'm going to cancel all their under 65 stuff, even if it rolls till 70, and we'll set them up on the right things for their Medicare age. Can they get both Plan Enhancer and TrioMed and get both payouts? In theory, yes, you could, Steve. In theory, yes, you could. But I would hate for the Department of Insurance to question you on why you did that and you don't have a good answer, right? Oh, because I wanted my customer to get rich on this plan. That's called overinsurance, right? So be cautious with that. But in theory, yes, you could. Again, kind of goes back to what I said on Plan Enhancer. We do not do a coordination of benefits. So we do not care what other insurance you have out there. We're going to pay what we said we're going to pay. Just be cautious. That's gaming the system. And if you're caught at some point, you're going to have to answer to why you did that or why you thought that that was the right fit for this customer, okay? If the client has a $5,000 deductible but gets $10,000 AME, well, the plan, Howard, hopefully I just answered that one for you on the no coordination of benefits, right? If you got $10,000 in medical bills, we'll pay those $10,000 in medical bills. And then, hey, your stop loss is at $5K. Now, on that one, Howard, I might not consider that overinsurance, because what if you sold it with the riders? What if I sold it with a cancer, heart, stroke rider and a sickness rider? Well, I could easily make an argument where, hey, my customer wanted $17,500 of cancer, heart, stroke coverage at guaranteed issue, so that's why I went up to that amount, even though he only had a $5,000 deductible. That's very easy to talk to, okay? So that's not overinsurance. And then I answered that stacking question like we said. Just be very, very cautious in that, okay? Stacking is allowed. I've even had it presented to me this way. What's funny, United Healthcare, if you're writing their accident plan, one of their underwriting questions asks, does your customer have any other accident plans? You can't lie on that one, guys, right? So, ironically, you cannot backward stack with United. You couldn't write Allstate's Plan Enhancer and then write United because it's asked on the application. Ironically, for this example, you could do it the opposite in theory. You could write United Healthcare's accident plan because they don't have another accident plan yet. And then you could come over to Allstate and write Plan Enhancer because we don't ask that question in our underwriting. So in theory, you could, but again, just be cautious with over-insuring our clients. I've seen customers make money on insurance. My wife has made money on insurance, okay? It's okay if that happens. You just have to be able to explain why you thought this was the right move for this customer, okay? The health questions come up at the end of any application, guys. So just write an application, the health questions come up. We didn't show them to you on here because these are guaranteed issue plans. So don't worry about health questions here. These are guaranteed issue. You will not sell the standard issue TrioMed if you're smart. So these are all guaranteed issue. Don't worry about the health questionnaires. You'll get it on a short-term medical app though, and it's cancer in the last 5 years, heart attack in the last 5 years, anything like that. It's really a 5-year look back, HIV, AIDS, things like that, okay? The standard questions in the industry, they're all the same. Cool.
I think that's everything, Nick.
I think so. Right on time.
Yeah, so thank you everyone for hopping on and learning more about these awesome options that either you can sell as a standalone or add on to your other sales. And thank you, Nick, for jumping in and answering all of those questions. It looks like everyone got their questions answered, but if not, email us at that email that was just up. Thanks so much again, and happy selling. We'll see you all soon.